All right. Hey, everybody, it's your boy, Sean McLaughlin. Today is December 5th, 2024. This is the All-Star Options Jam session. Hope you guys are doing well. It's a bull market. Crypto breaking out to over 100,000 or Bitcoin over 100,000. Lots going on today. Animal spirits are alive and well. Welcome to the jam session. So for those of you first timers here, what do we do here? What is this jam session? This jam session is an opportunity for us to review open positions in the All-Star Options service, trades that we've put on. We review trades that we've exited, whether for a win, whether for a loss, any adjustments we've made to our existing positions. We do a high level overview of what's going on in the market, things of note. We update stops on existing positions for people who are following along. We review open new positions since we last spoke. And by the way, it's been 2 weeks since we've done this. Last week was Thanksgiving. So we have a little bit more stuff to cover this week, just to catch up on action over the last 2 weeks. By the way, if anyone has any questions, I will do my best to answer them in the YouTube chat, or if you put your questions in the YouTube chat, I'll try to keep an eye on it and answer them as they come in. All right, so before we get into any charts here, I got to drop the old disclaimer here that everything I discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn from following my thought process, right? That's kind of the goal here. All right, so let's start at the high level here. Let's bring up the S&P 500 chart. We are at new all-time highs for the S&P right now as we speak. Bring up the NASDAQ, same story. It's a bull market, alive and well. Let's bring up the VIX just because, we like to talk about VIX every once in a while. Here it is. We are still trading with a 13 handle, or still priced at a 13 handle. That just kind of tells us that there's not a whole lot of fear out there in the market. Nobody's really concerned about too much. Now, listen, it's very easy to get complacent when there's not a lot of fear out there, right? It's happened before. It's happened again where things out of left field spike the market. I mean, all you got to do is look back to August 5th right here, where we had the huge volatility spike. These things sometimes come out of nowhere. But just because we're making lows in VIX, or at least 6-month lows, does not mean we need to start getting prepared for a volatility spike. Volatility does not mean revert higher. Volatility mean reverts lower. What I mean by that is whenever we have typical volatility spikes, here's one here in February, here's one here in April, and then here's the granddaddy of them all in August, you'll notice that these spikes tend to be pretty short-lived. Here's another one here, August and September 13th. These tend to be pretty short-lived. Now, volatility can go higher and stay higher longer than you expect, of course, but generally speaking, when volatility spikes, the bet that options traders would tend to make is that volatility will mean revert. And so you want to be generally a net premium seller at those times. But the converse is not true. When we are at the lowest levels here, like say in May and back again here now, it does not mean that we need to be prepared for a big spike. It does not mean a big spike is coming. Okay. It just means the markets are rather complacent right now. There's not a whole lot of fear in the market, and stocks are going to tend to trade on their own individual fundamentals, their own individual technicals, their own individual order flows. Okay. And that's a good thing. That's what we like, right? I don't like it when all stocks trade together in one direction. I don't like it when they're all going up together. I don't like it when they're all going down together. I want to, find stocks with my edge being all-star charts research, my edge being my process, my edge being my risk management. I want that to be the deciding factor on whether or not I'm winning, not because I just got long and everything's going up. Of course, at the end of the day, if you make money, it doesn't matter how you made it. It all spends the same, right? All right. So with that out of the way, let's get to some action here in the portfolio. And let's, we'll start off with the bad news first, and we'll finish with the best news. Okay. So let's start with the bad news and then work our way into the good stuff. So let's start with Coupang. This was a trade we got into back August 19th, I believe. We bought the February 25 calls for $2 right here. It was looking like it wanted to work for us. It was working really, really well. Unfortunately, the market had other ideas in early November following the election. thing basically just ran out of steam, right? And we got stopped out. I believe the date was the 21st of November, right? This is before Thanksgiving. We got stopped out. I was looking like an idiot because it immediately bounced, but then it rolled back over again. So I'm feeling pretty good about that exit. We got out for $1.08. You know, not terrible, right? We paid two, got out for $1.08. This is public service announcement. I say this all the time, but when I buy these calls, when I got into this position on day one, that my position was sized in a way that if I lost 100% of this premium, that premium would have only represented no more than 2% of my portfolio. But in fact, I think in this case, I limited it to 1%. That's just my discretion, right? But certainly never more than 2% of my portfolio. I don't want any one trade to cost me more than 2% of my portfolio, at least from the original price, right? So paid two, got off for $1.08. So I lost half of what I was willing to lose, right? So not bad. We'll take it. I think that's it for the bad news, guys, because the rest of this stuff gets pretty good. Let's talk about Samsara IoT. We purchased January 60 calls for $1.85 back in mid-September. And as was our plan, as laid out in the blog post when we published this piece, if and when Samsara got up to 70, or I'm sorry, let me rephrase that. We had a resting order to create we were starting from a long call position, but we had a resting order to turn this long call position into a long vertical spread or a bull call spread. So we bought the 60 calls, but I had a resting order to sell the 70 calls, same expiration, January, to sell the 70 calls at the same price that I bought those 60 calls. So I bought them for $1.85. Let's zoom in here a little bit for you. I bought these for $1.85. And then on this day right here, November 25th, I got hit. I had a good till cancel order. I wasn't even paying any attention. I think I was away from my desk when it happened. But my resting order to sell the January 70 calls at $1.85 got hit. And what does that do? What does that accomplish for me? I now have a bull call spread on a 60-70 bull call spread, meaning I'm long the 60 calls, short the 70 calls at zero net cost. It's a freebie at this point, right? So whatever I sell this spread now, whatever I sell for now is pure profit. Now, I don't talk about this a lot, or maybe I do, but it's been a while since I've talked about it. Now that I have this bull call spread on, I now have a new resting good till cancel order to sell this spread for $8. Now, why $8? The most this spread could be worth is $10, right? It's the distance between the strikes. I'm long the 60 calls, I'm short the 70 calls. So the most that spread could be worth on expiration day is $10. I tend to have a little bit of an 80-20 rule that I like to employ. If if I get 80% of the value of the spread, I'll close it, because why am I going to risk 80% of that full value spread just to earn that extra 20? To me, that math doesn't make sense. And I see that my boy Jason's saying IoT has earnings today. Fantastic. Fantastic. Maybe that'll get us to where we need to be, right? Maybe that'll get us to our profit target. Again, we have no risk in this trade right now. This thing could go to zero tomorrow. This could have the most disastrous earnings report of all time. Stock could go to zero. We didn't lose anything. I mean, we lose our open profits, but I'll risk open profits all day. You need to risk open profits to have the big wins. But hey, maybe we get a nice positive reaction. We've been getting a lot of positive reactions out of earnings. That's foreshadowing for a trade we're going to talk about in a minute. Hey, maybe that earnings gets us to where we need to be so we can sell this spread for $8. But that's what I'm doing right now, guys. I have a resting order, good till cancel, to sell this spread for $8. Whatever I sell this spread for, it's pure profit. That said, I do have a stop here at 48. If IoT closes below 48, that's my signal to get out. I'll probably raise this stop pretty soon, but let's just wait till earnings shake out and see what happens. Thanks for throwing that in there, Jason. All right, next up, FXI. This is the China Large Cap Index. Now, this is a position that we're kind of working. Again, all these details were laid out in the blog post. I want to be an owner of the January 2026 35 calls, which I am. I am an owner of those calls. I paid $3 for them, but I'm selling calls systematically against it, kind of like a covered call strategy to lower my net cost. And you can see down here at the bottom, these are the credits, additional credits that I've brought in since we got into the trade. So on day one, on November 6th, when we put the trade on, I bought those 35 calls for $3, but I also sold the December 35 calls for 52-cent net credit. Well, on the 11th, I was able to roll those December calls to the February 35 calls for 43 cents. I did that because the value of those short calls that I was holding got below, I think it was 25 cents, which was my level. And, didn't have much premium left in those. So I just rolled them out to the next month to bring in more premium. On the 25th, as FXI was going against us, this time I rolled those 53 calls in February. Instead of rolling them out a month, I rolled them down $2 to the February 33 strike, and I brought in an additional 26 cents net credit. So I've brought in approximately what, a $1.20 of net credit against my original purchase of 3. So my net exposure here is $1.80 right now. Fine. Now, these February 33 calls, I'll look to roll these again. I'll look to roll them into March at some point when the premium and these things erodes, and I'll keep you guys all updated in the chat room. Guys, if you're not in the ASO chat room, what are you doing? Get in there. I'll update you there, and of course, we'll talk about it here in future episodes. But that's the plan with this FXI. We're going to keep rolling, keep reducing our cost, our net exposure, and just kind of wait it out. I mean, such a powerful breakout back in September. I have a hard time believing that this is not going to stick. I mean, it's definitely testing us. It's definitely not making it easy. But I just feel like this FXI, this whole China thing, it's going to dig in here, and then we're going to really get a ripper. That's the feeling here. That's the feeling amongst the guys on the team. So let's just wait it out and keep lowering our costs if we can. All right, next up, IWM. This was a trade we got into November 19th. We did a March 225, 240 risk reversal. What's a risk reversal? It means I shorted the March 225 puts and used those proceeds to pay for the March 240 calls. All in it, I actually had a 50-cent net credit when I put this trade on, right? Well, guess what? As the plan was, if and when I would have been able to sell half of my calls to cover all of my puts, I was going to do that. And boy, IWM just totally ripped in our favor, which was wonderful, wonderful problem to have. Once we got north of 240, I was able to sell half of my calls and use those proceeds to cover all of my puts. And I still had $3.12 left over. So now, guys, I'm sitting in guaranteed profits in IWM. IWM could totally crash from here. That's fine. At least I walk away with the 312, actually 312 plus the 50 cents on day one. So actually we have 362 of guaranteed profits here. We're holding half of our call position. We have it basically free and clear until March. So if IWM rips higher here, from here, it's all gravy. We've already locked in profits. That's a great position to be in. I'm pretty happy about this position. It's consolidating here at a high level. I think we got higher prices in our future. Okay, and let's finish off with the best news. CM, Canadian Imperial Bank of Commerce. We got into this trade back in August. We've been talking about this all week because our options expire this month. They expire in, what's today's date? Today's the 5th. So what do we got? 2 weeks? 2 weeks from this Friday, 2 weeks from tomorrow. And so when we get into expiration month, we always want to, tighten up our stops, and we don't want to give back too much profit. And this has been a monster winner for us, guys. We bought these calls, these December 55 calls for $1.05. But here's the thing. I totally forgot when I talked about this last that we had earnings coming up. Happened this morning, I believe. And here is the reaction, thankfully. But before we headed into earnings, I sent out a post last night. Hopefully you guys all saw it. We talked about it in the chat room. Instead of stopping out, which I could have stopped out on this red candle here on December 3rd, I said, you know what? Earnings could be a catalyst for higher prices. Let's put ourselves in a position to win while protecting ourselves in the case that it's a calamity following earnings, right? So what did we do? We rolled our December 55 calls up to the December 65 strike, which was just out of the money yesterday, right? And I did that for a 680 credit. So I sold the 55 calls, purchased the 65. I collected $6.80 credit, which, by the way, that locked in a guaranteed profit, right? 680 minus the 105 I paid on day one. That left me with what, 575? 575 of guaranteed profit, yet I still had exposure just in case we had some follow through to the upside. And right now, I'm feeling pretty good about that, guys. Our 65 calls are now working. It's coming back a little bit off the highs, but for now, going forward, I'm going to do this live in real time. I'm going to move our stop. Oh, I can't do that here. Sorry. I am going to now place our stop right below today's low. Today's trading action, that's a pivot day or whatever you want to call it. Significant day following earnings, right? So today's low, which is what, 34.69, right around here. That's going to be our stop, at least for the next few days. Hopefully we keep raising that stop higher. But we don't want to let it get below that because these are December 65 calls. When we're at 65, if we get down to 64, whatever, it's going to be all premium and it's going to start rapidly eroding. Now, again, we're already guaranteed locked in profits here. So we're sitting pretty. And whatever we sell these calls for now just adds to our profit. But if we get below today's low over the next few days, that's going to be my signal to get out. And hopefully we keep raising it. I'm going to trail a trailing stop, but below the previous 3 to 5 day low as we go forward. So this time next week, I hope I'm raising my stop. But for now in CM, the stop is today's low. Congrats to those of you who've been in this trade. I know a lot of you are. This thing has just been a monster winner. I think this is our biggest winner of the year. I'd have to go back and look. We had a couple others that were pretty good, but this one, at least for me personally, I think this one's my biggest winner of the year. Okay. Now that we got that out of the way, let's review some updated stops. We only have a few to talk about. We already talked about CM, so let's move on. Grab, this one is really starting to show signs of getting going again. We are long the January 2026, so we still have more than a year for these to expire. We're long the $5 calls in January 26. We paid 40 cents for them. The stock has just ripped higher for us since we got in. Is it set up for another leg higher? Oh, boy, I hope so. I really hope so. But for now, moving my stop up to 450, which is just below this, this little gap here. I don't want to see this gap get filled. To me, that would be a very bearish development for our position. So our stop now for grab is at 450. Okay, next up, Dash. We got into this a few weeks ago. We're in a June 200, 250 bull call spread that we paid 850 for. I'm moving my stop up to 160 now. I think our original stop is at like 152. Moving up to 160. This is a nice little gap here, a little vacuum. I don't want to see it get back into that area. Also, we have the 50-period moving average rising up at that level as well. So 160 feels like the right stop level for Dash. Any close below 160 invalidates my bullishness in this trade. So there we are for Dash. Finally, ARK. Here's another piece of good news, right? This is a trade it was a diagonal when we first got in. We sold the March 53 calls and we sold the November 53 calls and used that cash to reduce the cost of the March 55 calls that we were long. We paid a $1.25 net. We did a couple rolls here, as you could see at these green circles. We rolled the November calls to December for 92-cent credit. Then we rolled them out to March for a 55-cent credit. Basically, what we're in now, it's not very clear here, and I apologize, but we are now in a vertical spread, a bull call spread. We're long the March 55 calls, and we are short the March 57 calls. The great thing is similar to that other trade, similar to that IoT trade, is that we are guaranteed profits here because we paid $1.25 when we got in. We collected 92, we collected 55. What's that? 148. So we have a guaranteed profit of like 20 cents, right? And so whatever we could sell this spread for later on, again, guaranteed profit. The most this spread could be worth is $2 because again, we're long the March 55s, we're short the March 57s. The most that spread could be worth is $2. I have a resting good till cancel. Excuse me. I have a resting good till cancel order out to sell that spread at $1.60. Again, 80-20 rule. $1.60 is 80% of the full value of the spread. I'm not going to be greedy. If I can get $1.60 for it, I'm out. Oh, sorry. I like this like choking thing going on. Vintage has a question there. What about the June 2025 Mara trade? I got out of that a long time ago. We got stopped out, unfortunately. Here's Mara. We got stopped out like 4 days after we got in. I'm so snake bitten with these Bitcoin miners. I've had no luck. But we got stopped out. So sorry if you missed that, buddy. Yeah, those Bitcoin miners are just not treating me well. All right. Finally, let's talk about some new trades we've gotten into over the last couple of weeks. Again, we've been off for 2 weeks because of Thanksgiving, but in no particular order here. We're in Revolve Group. We got a bullish bet on here. And guys, if you're new here, all the details of these trade plans, why we like the setup, how we're expressing it, what option strategy we're using, how we manage risk, where we may or may not take profits, where we may or may not make adjustments along the way. All of those details are laid out in every blog post that we publish for every one of these trades. And if you don't have access to that, please go to allstarcharts.com and get involved. Sign up. Okay, all these trade plans can be found at allstarcharts.com in the members section and the options section. You can find it all there. But for now, I'll just let you know that Revolve Group, ticker RVLV, we are long. We were looking like geniuses for about 2 days, and it's kind of pulled back to our original entry area. But yeah, setup is still looking good. Next up, MCO Moody's. We're long Moody's here. We got into this a couple days ago. Next up, Apple. We got into Apple earlier this week. I'm loving the mega caps. I think the mega caps can really have a real good opportunity to rip into the end of the year. And who better than Apple, right? And finally, Square. We got into a trade in Square right around here, right around Thanksgiving, and starting to look pretty good for us. Again, all the details for those trades can be found at allstarcharts.com. Please get involved. Additionally, in the chat there in YouTube, I threw a link in there to sign up for my free options newsletter. If you guys aren't getting my free options newsletter, I send out notes almost every day, about usually 6 days a week, not every day, but most days. We cover some trade ideas, some trading concepts, things about trading philosophy, interviews that I do with other traders, all stuff that anyone who's an options trader should find interesting and useful. And again, it's totally free. So if you're not signed up, go to that link in the chat and sign up for the free newsletter. We'd love to have you reading. And you can always reply to my emails and we can have a dialogue if you'd like. I'm happy to chat with anybody. All right. I'll just post this up for everybody who likes to have these. These are the updated stops. Once again, if you want to take that screenshot, you can. And lastly, if you have any questions at all about anything we've discussed here or anything about All-Star options or anything about All-Star charts, shoot us an email, info@allstarcharts.com. It'll get routed to me and I will answer your question. If you want to get involved in All-Star options, there's the link, stockmarkettv.com, get All-Star options. You should get involved. And finally, if you like the charts I use, trendspider.com is offering 50% off any subscription plan if you use promo code Sean50. Cool. All right, everybody. This has been the All-Star Options Jam session. Thanks for tuning in. Hope you guys had a great week. Hope you guys have a great weekend coming up, and I'll talk to you again next week. Until then, trade them well, be well. We'll see you again soon. Take care.